Okay, welcome SLAE family. I am so happy to be here with all of you today. And we are in for a special treat because we have a power woman today who's going to talk to us about money, which I love. So before we kick it off, I want to just take a second and introduce you to Susan Mitcheltree. Susan has over 15 years experience as a certified financial planner professional. She's an equity partner at Berman McAleer. She's here out of the Maryland area where I live, so I've had the pleasure of knowing her for many years myself. And I think before we do anything else, I want to share with you that she brings a vast perspective to the conversation of money and the economy. And the reason that she does so is she came from humble beginnings. She will tell you a little bit about her background. She does not come from a high wealth family, and she really got into this industry. But now she is really with a very high-end boutique, and most of the people who are clients of Berman McAleer are extremely well off. So she has experienced both ends of the spectrum of money. Is that safe to say, Susan?
It is.
An awesome mom. So I'm going to kick it off today. And if you could just share a little bit about yourself personally,
Sure.
And maybe also how you ended up going into this industry, which tends to be a little bit on the male-dominated side. So
It does. Yeah, it does. Well, I think I've always been interested in finance. If I look back from my very, very early days when kids were playing with trucks or Barbies, I always wanted to play bank as my favorite game. So my family got used to coming to my virtual bank and they're like, this is a perfect career for you. But when I graduated college, I was out there in the working world, not in finance, and realized that if I wanted, in the career that I had before, if I wanted to have a family, that one wasn't going to work because I was traveling all over the place and I wanted to be a mom that was going to be present. So I was looking for something else and thought briefly about accounting and got really good advice to not become an accountant, but think possibly about becoming a financial advisor. And Leanne, as you had mentioned, I don't come from a family of wealth, so we never had a financial advisor. I didn't even really know what that meant. But when I started exploring it and seeing what a financial advisor does and how they can develop wonderful relationships with clients and help them, over the course of many, many decades, I knew that it was going to be just a great career for me. I think it's a great career for women in general. It's tough when you're first starting out, but if you can stick with it, it's just very fulfilling to work with people and help them realize their goals and so many different ways. So super rewarding.
And you're actually the first person to go to college in your family, aren't you?
I am the first person. Yes, I forgot to mention that. Yeah, I'm the first person to go to college, and then my little sister went to college after me. So that was definitely a big deal too, and not really being able to have family support to navigate that. If you've walked in those shoes before as a mom or dad or grandparent, then you can help your daughter, son, or grandchild navigate that. But my parents just hadn't done that. And so it was all new to all of us at that point in time. So yeah, I am the first to go through college. So here I am.
Congratulations on not only that, but also it sounds like you inspired your sister, which is really a great thing to do as well.
She inspires me daily. So I'm just trying to keep up with her.
Oh, that's wonderful. And now one of the things that's so interesting is, thank goodness you did, if you wanted to go to school, you had this interest in money, but you decided to go into that, and you've been through good economies, you've been through bad economies and recessions and all kinds of stuff. So I want to ask you, and since you're the economic person here, I know you need to put a disclaimer, and since I'm the lawyer, I'll add the disclaimer for us. Okay. It is brilliant, but she does not have a crystal ball, so you cannot hold her accountable to her opinion. We're asking her professional opinion. It's just an opinion, but she is extraordinarily smart. So Susan, we have been through a lot with the pandemic and the economy, and the government has been handing out stimulus money like candy at this moment. And I know that a lot of people have counted on it, but also at the same time, it does have to come to an end. And one of the big conversations everybody's been talking about up here for all us lay people who are not in the financial world is what's going to happen. Do you think that we are in for a recession? Are we in for inflation? Like, what do you think when they stop? Because at some point they have to stop. What's your thoughts on that without having a crystal ball, but just based on experience?
Yeah, that disclaimer, I guess I'll go there first. I think that's very good. So not an accountant, not an attorney. This is not tax or legal advice, just a conversation in general. The economic conversation is always an interesting one, and it's certainly one that we get a lot. It's on people's minds, definitely now, but it's always kind of on people's minds of what do you think's coming down the road? I do think that there's a lot of pent up demand right now, as far as the economy is concerned. We've seen some people's balance sheets, people that have money and were able to continue working throughout the pandemic. Those people accumulated money throughout COVID because they weren't able to spend it. It's not that they didn't want to spend it, but restaurants were closed, they weren't traveling, and so they just weren't able to spend it. So there's some pent up demand for people to get back out there and start doing some of the things that they used to do. But that said, the pandemic is not over. And so what's going to be that full stop to this is still very much a question mark. It might be full approval of the vaccine. That may be the clincher, but I'm not really sure. I am optimistic, though. I've seen many businesses open up again, and the business owners are bringing people back. So that's encouraging. You mentioned money in the system. There is a lot of it right now. So you're right that the government is still stimulating the economy under Trump, now under Biden as well. More direct stimulus payments are going out. Unemployment benefits for those who are still out of work are continuing. So that's also stimulating the economy. There's money going to places that shuttered venues that weren't able to have people come to their venue. They're getting money. Schools are getting money. Government's getting money. There's a lot of money in the system. And the majority of it is going to be spent either because it needs to be spent, like the individual needs the money because they haven't been working. And so this money is really important to them, and they're going to put it back in the economy for the regular expenses. Or the parameters of the money that is being received, like by businesses under the PPP program, for example, their parameters around spending that money to get it back into the system. So all of those things are working to stimulate the economy. But I think the big question that's kind of out there hanging over a lot of people is, when will people be able to fully go back to work?
Sure.
And that is a really good question. Because if you look at businesses, and it's across industries right now, everybody is looking to hire. There are help wanted signs everywhere.
Everywhere. It's amazing.
It's everywhere. And so the jobs are there, but the people to work those jobs, they're not there yet. So the question is, when are they going to go back to work? And there's a lot of different schools of thought, and some can get very political here about what's going on. I won't do that. I do think one of the reasons that we're still in this situation is we don't have a fully approved vaccine yet. We have a vaccine that was approved for emergency use. And so until we get that full vaccine approval, it's just my personal thought, I think we're still going to have a bit of delay for people getting fully back to work. And then there's also, childcare. We were talking, you're a mom, I'm a mom.
Yes.
Our kids are a little bit older, but this pandemic really hit women more than men. And part of the reason for that was some of the jobs that were hit in the hospitality industry, but another big factor was childcare. And if you're a mom of a young child, you need to have reliable childcare in order to feel comfortable and be able to work and do your work in your career without worrying about your kid and the safety of your child. And those little ones, there's still not an approved vaccine for kids. And the vaccine's approval for, the 12 to, I think it's 16-year-olds, that just recently happened. So that hasn't been around for a long time yet. And for the little kids, it's not even here yet. So I think that childcare issue and just making sure that I can send my kids to, if it's daycare or school, in a safe space is also going to be another key factor for people getting back out into the workforce.
That's really interesting that you say that, because, you know, I had so many conversations when we were all on lockdown about women who were trying to manage their child and work like this. You know,
Yep.
in some cases, you know, you can keep your kid busy if they're a little bit older and let them play in electronics and do stuff, but some of them, it's a doozy, you know. And then some of the people even had to homeschool their kids and they have no teacher experience. So it
Yeah.
had been really wild watching this across the board. But the other thing, Susan, that's interesting is, you know, I run a business where I talk to people all over the country. So for example, here in Maryland, where we live, there is no longer a mandate to wear a mask. But if I go to my grocery store, about 80% of the people in the grocery store voluntarily are still wearing masks in our state. But I was talking to a friend of mine out in Ohio, and they said nobody is. They're like, it's kind of weird if you see somebody wearing a mask. So I wonder also economically if some states are going to recover more quickly than others. I mean, what do you have any thoughts on that?
I mean, definitely the system of, you know, government that we have and the approach that's been taken by way of this pandemic has been led by the states. There's been some influence at, you know, the federal level, but by and large, the states have been left to make their own decisions. So to your point, you can be in Maryland and everything is one way. I live up in Southern Pennsylvania. I can go across the border up to PA, completely different. If I'm up there, you're not seeing many people wearing masks. It's not like there aren't people wearing masks, but by and large, most people are not wearing masks where I live. So some of that's very state specific. And again, there's that political element to it as well. So I'm not sure where how that's going to play out, but I do think that it's happening at a state level and is very different one state to the next.
Yeah, it's interesting because you live in one state and work in another, so you kind of get to see both perspectives on it.
I do. I do. I'm in Southern Pennsylvania, Central PA. So
when they stop at some point, it has to stop. And what do you think? And again, disclaimers everywhere.
Yeah.
But inflation, taxes, like, what do you think the impact is going to be when we do shift out of this stimulus state that we're in?
Yeah. So as far as taxes are concerned, I mean, so we've paid for the majority of this pandemic by just adding to our national debt. And I know that's of concern for a lot of people, especially if you go online and you see those numbers, tick, 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 tick. It's a little scary. Yeah. So there are a number of ways that you can address that national debt. You can raise revenue, so raise taxes. You can cut spending, or you can inflate your way out of it, like grow the economy out of the debt. There's definitely a lot of talk right now about raising taxes. I know you wanted to talk a little bit specifically if you're someone that has money, what do we do? If you're someone that doesn't have money, what do we do? So if you have money, your taxes are definitely going to be in the line of fire, and like taxes in a lot of different fronts. We're talking about some of the obvious ones, like income taxes that most of us think about when it comes to taxes at the federal level. But then there's also estate taxes, there's capital gain taxes, there's just raising revenue is one way to help address that and also pay for spending efforts. I haven't seen a whole lot on the cutting spending side yet. In different administrations, you see more of that. I haven't seen it in, the last 4 years under Trump. Haven't seen it yet under Biden, but in all fairness, we've been right now over the last year plus now in the middle of a pandemic. So focusing on trimming expenses when you're trying to really help people just get by, and you're putting resources towards putting together a vaccine and the logistics of getting it out to everyone and all of that, that requires money. Yes. And so now may have not been the time to focus on that national debt, but to your point, at some point we will have to focus on it. And so there are a couple different levers that can be pulled, and it's not like I only pull one. I could pull several of them to one degree or another. And even though a lot was accumulated during COVID, that doesn't necessarily mean we all have to solve it over the course of the next year and really, tighten our belts significantly. There are a variety of ways to address it, and we'll have to do that. And some hard decisions are going to have to be made. I mean, that's really what it boils down to. If we're talking about family finances, when you're talking about personal family finances, you've got money coming in, you've got money coming out, and sometimes you got to make some hard decisions. Nobody has unlimited resources. The amount of resources person A has may be vastly different than the amount of resources person B has, but they both have limited resources. And so you need to choose how you're going to allocate those resources. And that to some degree has to be done, at the federal level as well. And that may mean that everything people want is just not going to be accomplished. And then in that case, you got to come to some agreements. So I guess it's like husband and wife have to come to agreements. My husband and I, same thing. It's a smaller version of a bigger thing at the federal level.
Well, it's really interesting because I know that, for so many families and so many businesses, that money was everything. And I don't ever want to diminish that when I, comment that a lot's been given out. It's not to say that that wasn't crucial. And, I've seen some of my favorite businesses, one of my favorite restaurants that I've gone to for years and years went out of business. So, people who were operating a business or working for a business that was, doing okay, a lot of times it wasn't enough to save them anymore. Maybe people who had a little more could survive, or people who had something that wasn't impacted as much. But I've seen some pretty sad things. So in a lot of ways, it was crucial. But again, we are facing that it has to stop at some point. So this brings us to one of the things I wanted to ask you. So, just like you've seen both ends of money, from not coming from anything to dealing with a lot of clients that are millionaires, you've kind of seen it all. There are people who are watching this that are on all ends of the spectrum. Some of them are just really honestly struggling and living check to check, sometimes stimulus check or unemployment check or whatever, and barely being able to stay afloat. And it's scary and it's heartbreaking. And it's really challenging. And then there are people who are in other industries. For example, I have a lot of realtors who are part of this organization, and they're having, like Disney, it's unbelievable for them. I mean, what's going on in the real estate market is crazy. And a lot of them are having the best year they've ever had in their life. So what is important to me as part of this group is that we try to reach out and take care of everybody. And so again, disclaimers attached. You are going to talk to somebody who is on the side of struggling right now, or you're going to talk to somebody on the side of abundance right now. Looking at all this, are there generalities that you would say to someone on each end?
Well, I guess we can talk first to the folks that are struggling right now. For a long time, again, my own opinion, in this country, it seems that economically speaking, we've been bifurcating into those individuals that have a lot of wealth and those individuals that don't have wealth. And that middle class has really been being stretched, and they're finding themselves at one end or the other of that spectrum. COVID-19 kind of put that situation, for better or worse, on steroids. And the people that were living paycheck to paycheck, they were in an even dire situation, and more people joined them. And the people that had wealth, they by and large did okay through the pandemic, as long as they're staying invested in all of that. But if they kept their money kind of put, and they had somebody that was helping them, to manage it, and kept their jobs, those people that kept their jobs throughout the pandemic, whether or not they had wealth, then they, didn't have the spending opportunities that they typically do, like I was talking about before, and they were able to actually accumulate more during that time. So I think COVID kind of really did a number on that. It's a good opportunity, I guess, to just sit back and reset. So if you were in a situation where you're struggling, my first recommendation would be to kind of take inventory of where things are right now.
Mhm.
Like, where's my cash situation? Do I have a savings account? How much is in it? Do I have debt? How much debt do I have? How much income do I have coming in? How much expenses do I have going out? So basically getting the lay of the land of where things stand. And then once you get the lay of the land, then you can start moving in the direction that you want to move, be it working on reducing debt and how can I maneuver my income to focus on paying that debt down. Or if I need to bolster up my savings, again, how can I make more income, reduce expenses in order to increase my savings and give myself a little bit of a buffer. The people that are living paycheck to paycheck, you have those, payday lenders out there, and you can get yourself in a very bad situation if I need money on Wednesday and I'm not paid till Friday. So I go there to get that money, and then I end up paying an exorbitant interest rate or fee in order to get that money a little bit quicker. And that's a cycle that can really hamper your ability to kind of get yourself out of that situation. So, making a budget or spending plan, if you don't like the word budget, some people prefer spending plan, that's fine too.
Spending
Identify your priorities and just be purposeful with the income that you have. And you might have to make some cuts and they're going to be uncomfortable, but it just depends on what your priorities are. And you have to assess those for yourself because each person's, unique. As far as the environment that we're in right now, interest rates are really low. And that's a, big topic. If you have a savings account, there's really low interest rates because you're not earning anything. But if you have debt, then certain types of rates are pretty low right now. Mortgages, a prime example of that. Yeah. So if there's any debt that you have, if you have decent enough credit, there may be opportunities to refinance it at a lower interest rate with existing debt, and that can reduce your monthly payment. And that can provide a little bit of that extra money to be a cushion to save a little bit more, or pay down debt a little bit quicker, or whatever your personal goals are. The Financial Planning Association here of Maryland, I was president back in 2015. They're a really great resource. They offer annually a Money Power Day. Historically, it has been held at the Polytechnical Institute, I think it is here in Baltimore. Mm-hmm. And that, I think it's typically in the spring. But the Financial Planning Association of Maryland, they have that Money Power Day. They offer free financial planning advice. And at least at that point in time, they actually offered tax returns as well, like people to do your taxes. So they offered a number of really good resources. They used to do a Baltimore Financial Planning Day in the fall. I don't know if they're still doing that, but I'm sure that they would have some resources. If you're looking for some help on kind of getting on the right track, they're a really good resource and great people. I know a lot of them.
It's interesting because I remember years ago when my husband and I owed everything we had to Sallie Mae, and and people would talk about saving money, and I'm like, I'm going to be paying off our educational debt till we die. Right. One of the things that was really valuable, somebody who was wealthy told me this many moons ago and said, look, you have a certain amount of money, you have to make these payments every month. He said the temptation would be that when that finally went away, you'd have that money. And he said, before you do anything, I want that money to go into something like you still don't have it, but this time to go into something that would, have some kind of savings or some kind of long-term benefit.
Yeah, that is a great strategy. And I remember having those myriad of student loan debts as well. And as I paid one off, it's like, woo. And I'm also actually on that note, I am a big fan of celebrating your successes. So if you happen to have a bunch of credit cards, student loan debts, auto loan, whatever those are, and you map them all out and you take the strategy that you just talked about and you start systematically paying them down, when you get one paid off, celebrate. Like, take a moment to say, we just accomplished something. That felt really good because you had to make sacrifices in order to make that happen, as we all do in life. So celebrate those successes and then get right back on and work towards, if that's your goal is debt reduction, then work towards systematically reducing the debt. I'm a huge fan of what you just said. I think that's really important.
I like the celebrating concept. I mean, back then we had a little piece of paper on the refrigerator with the grand horrifying total of what we had to pay down. And this is such a sad statement, but when it would go down a little bit, but when it would drop by another $5,000, like that was not wiping it out, just to give you all an idea. But when it would drop by another $5,000, I would go in the kitchen and break into a happy dance. I was like, hey, 5 more down, but it just seemed like it would never end. Now, let's talk about the other side. There are people who are, well off, and they are looking at, oh my gosh, taxes and inheritance and, what we call champagne problems.
Yeah.
What would you say to somebody in a position like that?
Yeah. So
well, congratulations, first of all, right?
They're first world problems. If you're in that situation and you have wealth, taxes are categorically on your radar. You can't escape the talk about taxes these days. And you're in the crosshairs, let's be honest. So we were talking a little bit earlier about that. Income taxes, we could talk about that first. If you are a high income earner, that's one of the easier ones for something, to be done with. And the Tax Cuts and Jobs Act that was passed under the Trump administration, and don't quote me on this, I think it was 2017, that reduced tax brackets nearly across the board. So most people had some level of a tax reduction by the TCJA, or the Tax Cuts and Jobs Act that was passed then. So there has been a lot of talk about bringing that all back up to where it used to be. So that impacts those individuals that are high income earners primarily. So we're talking about taking the 37% tax bracket that is right now, and it was then at 36 or 39.6. So increasing it by 2.5% roughly. And that can be meaningful if you're at the upper end of the income tax. So anything you can do to help save money on a pre-tax basis and kind of get it off that tax grid is important. So maximizing your retirement savings plans, like your 401k, or if you work for an educational institution or a nonprofit, you probably have a 403b. Some educators also have a 457, so they have 2 simultaneous retirement plans, and you can max both of them out. So there are lots of nuanced parameters around them, but they are available to some people. So maxing them out as much as you can, and maxing out these days is $19,500 if you're under 50, or $26,000 if you're over 50. So they give you the ability to pack a little bit more into those plans if you're older, to kind of catch up. It's called a catch-up provision. But there are sort of savings plans. There's health savings accounts. These are all pre-tax savings vehicles that can help reduce your taxable income. And if you're a business owner, then you can even defer more than those numbers that I said. And there are a variety of different types of plans and strategies that you can employ as a business owner. Taxes in general, it looks like they, probably will increase at some point. How that's going to happen, when it's going to happen, we don't know.
That gets back to the crystal ball that you don't have.
Yeah, that crystal ball. So from what we can tell, at least if we look at history, generally speaking, when there are changes, especially significant changes to the tax code, they're made proactively. So they could make changes, let's say today, that will be applicable at some point in the future. Now, there was a recent proposal to make some changes to tax laws retroactively. I don't think it's going to get anywhere, because people have already made decisions, like in May, for example, on the tax rules that were applicable in May. So changing them as of April, that's a little disingenuous. But I don't think that's actually going to come to fruition. How it's typically played out is legislation is passed now, and then at some future point, this is how it's going to be, and you can plan accordingly. So I don't know that anything is going to happen on that front in 2021. It could. I don't know. 2022, I think is probably more likely, or at some future point. But income taxes are definitely first and foremost in people's minds. Definitely, if you have wealth, then capital gains are another thing, that you're thinking about. There's lots of talk now that capital gains tax rate in this country is different than ordinary income tax rate. So if I have ordinary income, one tax schedule is applied to that. If I have capital gains, there's another tax schedule that's applied to that. And when would I have to pay capital gains? It's on the sale of things like stocks or bonds or real estate or other type of capital assets like that. And they're generally things that people that have wealth have some of these types of assets, and they are buying and selling them over time. Nothing has been passed yet as far as changing the capital gains tax rates. There has been talk that they'll bring them up to ordinary income levels. There's talk that they'll bring them somewhere between ordinary income levels and where they are right now, but nothing has been passed. So it's definitely something we are, watching very closely, because that, affects a lot of people. And I could talk a little bit about estate planning if you want me to get into that. That's a big one. You got the attorney background.
Well, hopefully that's a problem for a lot of our listeners, but we'll take a minute on that, because there is one more thing I do really want to ask you before we wrap up. Yeah.
So there's lots going on in the estate planning world. Two specific ones that I can talk about are the step up in basis. I don't know if you've heard about that yet, but there's definitely media coverage on that one. And then the estate tax exemption. So step up in basis, we can take that one first. So right now, there is a favorable provision of the tax law. It's called a step up in cost basis, and it happens when someone passes away. So let's take two scenarios. If I have someone that has wealth,
okay,
and scenario A and scenario B, they both have the same person that has this wealth. Scenario A, they're going to gift this wealth to someone. So if I have a stock, I ran some numbers, so I'm gonna look at them here. So let's say I've got 100 shares of Coca-Cola stock, and they were purchased January of 1980. So it was 22 cents a share at that point in time. So it cost me $22 to buy this stock. Not considering stock splits or anything like that. We're just gonna keep it real simple. Coca-Cola closed per share yesterday at $54.12 per share. So that 100 shares that I have and I bought for $22, I can now sell for $5,412.
Yeah.
So that means that I'm going to have a gain on that sale between what I purchased it at, that's called your cost basis, and what you sell it at, the market value. There's a gain there. And that gain is taxed at those capital gain rates that I was talking about, which are right now 20%, assuming, again, a wealthy person. So you've got about $1,000 roughly of taxes that you would have to pay on that gain. That's scenario A. If scenario B happens, I've got that same person, and instead of gifting the money, they passed away, unfortunately. Okay. And they have the same person receiving the stock, but now they're receiving it because the person passed away. When a person passes away and they have that same stock that they bought for $22 per share back in 1980, it goes to the person who received it according to the terms of the will, let's say in this case. But it receives it's called a step up in cost basis. So it's almost as if the person receiving it received the stock as though it was purchased on the very same day. So it's like I purchased it for $5,412 today. If I sold it that very same day for $5,412, I would pay no gains on that.
That's a huge difference if you scale it, especially too.
Right. That's a smaller dollar example, but it can get, to your point, very significant. If you have a lot of people, who bought stock many, many years ago at very low basis, if they were to gift that stock, then they would have lots of inherent gain there. But if it goes to the heir at death, they currently get a step up in basis, and that is significant. So that's one of them. The other one is the estate tax exemption amount, and that's a big number. We're talking about very wealthy individuals here. So you have right now, the current exemption amount is 11.7 million per person. So if you have a married couple, let's say, their exemption amount is over $22 million that they can give to people or at death, and there's no estate tax on that. So that is a significant amount of money. And we're talking to a certain set of Americans at this point.
Yeah.
That exemption amount is set to sunset on December 31st of 2025. So right now, the exemption amount is 11.7 million that I could move out of my estate, and I use part of what's called my lifetime exemption to get it out of there, but it's not going to be subject to estate taxes.
Okay.
If I waited until 2025 and none of the laws change between now and then, that's caveat, then that 11.7 million actually drops down to 5 million, adjusted for inflation. So the actual number, don't know exactly what it'll be, but somewhere around 5 million. So there's certainly tax planning that's being talked about now with respect to that. And also the current administration has talked about just proactively reducing that figure earlier than 2025. And there has been some discussion of taking it from the 5 million that it will reduce to now under current rules to 3 million is one number, 3.5 million. No laws have been passed, as far as no legislation should say has been passed yet on this, but there's definitely discussion on this. So what do you do if you're in that situation? There's tax planning strategies to use trusts. The single lifetime access trust is a common one, especially when you have a married couple. Just the provisions of that are a little bit favorable in that case. And that's a way to move money outside of your estate now and use up part of that lifetime exemption amount that you have. There's also annual gifting. Any one person can gift any other person $15,000 a year. They don't even have to record it anywhere. And with educational gifting, if you're doing gifting to like a 529 plans, we'll have oftentimes grandparents that are looking to move some money out of their estate will gift into a 529 plan, and there's a 5-year rule. I can do 5 years as a grandparent, for example, but it doesn't have to be. Into my grandchild's 529 plan, as though it's 5 years of annual gifts. So it's $15,000 a year for 5 years. It's $75,000 I can move outside my estate over into this 529 plan for the benefit of my grandchild.
And what difference that is when you're talking to Sally Mae, you know what I mean?
Right. It's a very nice thing to do. If you're in that situation, your grandchildren will appreciate it. And then there's the staples, certainly like direct gifts. So let's take the grandparent, scenario again. They can make direct gifts to educational institutions for tuition and medical institutions. And that actually does not even count as the $15,000 annual gift. But you can give people more than 15,000. Sometimes we'll get this question, can I give someone I want more than 15,000? Yes, you can. You'll just use a portion of your lifetime exemption amount, which, as I mentioned a moment ago, is 11.7 million. So you just have to file it on your tax return, but you're not paying taxes on that. They're not paying taxes to receive it. You just need to record that you've made this gift and used a portion of your lifetime exemption.
Outstanding. Okay, I got one more question because we're running out of time, but this is really, I think, an important one. And I'm dying to ask you this question. So, yeah. One of the things that shocks me is that the educational system does not teach money. It blows my mind, some of the things that my son has come home from school that seem to be a priority for him to learn. He's never going to, I remember years ago, he came home and he was memorizing all the parts of a fish. And I'm like, okay, if he's going to be,
if you're into ichthyology, it's very important.
Why don't we teach anything about money, savings, what debt costs, compounding, like all that stuff. And I think kids are so impressionable. Like, I'll tell you a quick little thing. When I was young, my grandfather used to come visit, and he taught me one thing that I still do to this day. I was little, and he would give me $5, and it was 5 $1 bills. And I had my little, Barbie wallet or whatever it was back at that time. And the little Velcro wallet you get when you're,
I remember.
He would say to me, like, you put them all in the right way, facing the same way, like you can't have any upside down. And he said, and he would always look at me and he'd give me a little $5 and he would go, if you respect money, it will respect you back. And that to this day, I like, if there's a dollar backwards or upside down in my wallet, I'm like, but even despite that, despite all the time I spent trying to educate myself and becoming an attorney and all that, there was never a class in finances. And whether our kids go to public school, our kids go to private school, there's just nothing. So it's kind of on us as parents or grandparents. And I wish someone had really sat me down. So you are a mom. I know you have a beautiful daughter, Mina. If you are going to, which you do, teach a child, can you give a little recommendation? Because some people, they don't have any money. So there's like limited ways that they can teach people. But also there are people who have quite a bit of money. They may have more avenues, but they can also cause damage by, not doing it properly. So any final parting words of wisdom for all the parents watching this who want our kids to have a clue about money in this day and age as they grow up?
Yeah, I would say a word out to the parents and definitely the grandparents as well. I hear this time and time again from my clients, and even some of my colleagues here. If you read over their bios, you will be surprised at how many of them got into a career in finance because they had a grandparent or a grandmother or a parent that talked to them about money and kind of sparked their interest in the stock market or finance or what have you. So parents and grandparents, they play a very vital role in educating kids about this. And to your point, not a lot of conversation, unfortunately, about this in the school systems for sure. It has been introduced as part of that FACS, I think it's Family and Consumer Science curriculum. But even that is, I'm not really sure how specific they are in the things that they're teaching. And they're sometimes teachers teaching it that aren't really super savvy on that subject because it's not their area of expertise. So it can get a little bit challenging as a parent or grandparent, play a super vital role. I know in our family, I guess because mom's a financial advisor, we talked about money with Mina from the time she was little. And I think if you can get like age appropriate conversations about money going, I think that's really important. So start the conversation early, start it often. For kids who are really young, make it fun. You can incorporate some games. There's lots of games out there that have to talk about money. And so you can use all these things as a learning opportunity, with kids. When they're very young, something as simple as they have a little cash register and they've got some play money. So you can buy something at their play store and exchange dollars for goods and just get comfortable with this is how money works in our system right now. As they get a little bit older, I did some research on some of the more up-to-date tools that are available, and there are a lot of cool apps out there. So one I found, if you are giving your child an allowance, and the structure of the app is I think good for younger kids. So if you have a young child and they're working for you and you're giving them an allowance, you can use an app. It's called PiggyBot. PIGGY, PIGGYBOT.
Okay.
It's super cute. As a parent, you can like virtually pay them their money. They can designate different goals that they have, a bike, a helmet, a Barbie, a truck, or whatever they want to buy. And then they can start saving their allowance money for it. And then they make a decision. Yeah, I want to take this amount of money from my piggy bank and buy that helmet or buy that, whatever they want to do. And then the parent buys it for them. So it's like all virtual, it's a virtual allowance almost. But I thought it's laid out really great, good controls on the parent side. It's a free app. So that's one you can consider if you are giving them an allowance and you want to kind of introduce them to saving and delayed gratification, all of those things.
Phrase right there.
Yeah, delayed gratification. If they're a little older, like their first bank account is always a good idea. They get their bank account. They may have a debit card, which is a debit credit card associated with that. So those are good opportunities to just learn how the banking system works. Certainly when they get their first real job and they get that first paycheck, that is a key time to have it will be a very difficult conversation for them when they learn the difference between gross and net pay. But that opens up, right? That opens up the conversation on taxes, and you're giving this money to, who are you giving it to? So talking about, federal and state and tax rates, and what does this money do for you? You're enjoying the road, getting from home to work, and somebody has to pay for that, and you're paying for a portion of it now. So that first paycheck is a really good opportunity to let them know a little bit about how the system works. And then definitely before they leave the house, I'm going to leave that kind of before they leave the house and they're out there on their own, how to manage a bank account, understanding basic elements of credit and establishing good credit, understanding how a credit card works. As soon as they're 18, they can sign up for a credit card on their own and they don't need their parents' permission to do that.
Yeah.
Yeah. And I used to work for a credit card company when I was in college many moons ago, and I'm very sorry. But when you had someone who was 18, they were like, yeah, I totally want a credit card. They may not realize how a credit card functions. And so understanding that is really important, because it's not just free money. There are costs associated with that. Yes, you might only have to pay $34 this month, but you have a $2,300 balance over here, and that will need to be paid at some point in time. So understanding the dynamics of that is important. Living on a budget, there's a number of apps that are out there now that are pretty cool as far as budgeting and some of these things that I'm talking about here. Mint.com is a really common one. So that has some good resources, can help you get on a budget, track your spending, and just see where the money is going. And part of it is just knowing like where the money is flowing. And then that will in and of itself help you to make some better decisions when you're cognizant of what's happening with it right now. So when it comes to kids, I always like to make it fun. I also don't try to teach them everything at once. Before I said I had a career prior to this, I was teaching prior to this, teaching adults. I realized that what I'm saying, they're only retaining 7 to 10% of it. So we only get 7 to 10% of what someone else is teaching. So that's the same rule applies for your kids, and maybe even less because it's your kids, right? So take it in small pieces and kind of keep the conversation going. If you talk too long, it's going to feel like a lecture, and we all know how much kids love to be lectured. Yeah. So don't go down that road. Just keep the dialogue open, small bits, continuous conversations, and use all of those moments that just come naturally in our life as teaching moments. If you're going out to the restaurant, take a look at the bill. My husband always has our daughter pay the bill in cash, and she will have to give an estimate of what she thinks it's going to be when it has them all line items, but not tallied up at the bottom. So that's like a local diner will do it that way. And she'll have to add it up, think tax, and just get an idea in her head. And she'll take the cash up to the register and see how close she got to it. But
so smart. It's kind of like a game for her,
It is. So you make it fun. Yeah, you make it fun. And again, as your kids, if it's saving for a goal and they did that when they're younger, if it's paying down debt when they're post-college or whatever, celebrate those things, celebrate those successes, make them fun, and keep the conversation going. You don't have to, you don't have to be an expert in money. Some parents will feel like, I don't even understand it. How can I teach my kids about it?
Yeah.
That's an opportunity for the two of you to learn together. There's no rule out there that parents need to have the answers to everything. Usually, if you have a teenager, they have the answers to everything. But as a parent, you don't have to have the answers to everything. This could be an opportunity for you and your kid to both learn something new at the same time, which I always think is pretty cool.
Yeah, I love that. I love that. Well, I really, really want to thank you for being in here and all your wisdom and experience. It's amazing. And for all of you who want to connect with her, Susan is part of the group. So if you want to reach out to her in our Facebook group or message her, and if you wouldn't mind, Susan, maybe you can post a couple of those apps that you were talking about.
Oh yeah, sure.
That would be really great. But thank you for all of it. Thank you for being here and for all the different perspectives. Really appreciate it. And you've given some great examples for those of us that are parents too. I'm always trying to lock down my kid on saving money and
Yeah.
how money works. And, I do know the second he walks out the door, he's going to get 20 credit card offers. It's crazy. Like nobody's qualified for any of that. So thank you for all of it. And everyone.
Yeah, thanks for having me. I appreciate it.
Oh my goodness. I hope you enjoyed Susan even half as much as I did, even more, but she's pretty terrific. And we will be back next Tuesday. Look forward to seeing you all there, and feel free to leave comments or questions for Susan. She'll be checking in. So thank you again very much. Okay, everybody, have a great day.
Take care, everyone.